What's up, guys? It's November 17th, 2023. I'm going to do a breakdown of the Emini. It was a pretty tough opening, I think. It was very easy to get cut up before a move took place, if this is a move. Very slow. It was rough to sit in 11 points. Yeah, 11 points in like 2 hours. Oh, hour 30-ish, if you caught the breakout, the retest. In the previous video, I had left the price action up because I was I was crunched for time, and then I was thinking about it, and I think I like to leave it up because what I've been doing at the end of the day is looking at how this day would end and how the first 6 bars would match or how they would continue from the previous day. So I'm going to start leaving the price action up so we can talk about this because I caught this breakout because I thought this was a bull flag. And I don't think I ever mentioned like anything about that in the previous video, so I think we'll get more out of an overall. I'm assuming most of you trade the E-mini anyway, so you guys are living these bars, so we don't need to relive it. We could just talk about it. So yesterday was pretty annoying. It's even hard to tell like what the days were. This was yesterday, right here. Super annoying price action, honestly, the last couple of days. Like I got shredded a little bit. Big up, big down, lots of buying within the downtrend. Not good sign, you know. That's a huge reversal bar. I got trapped there. And yeah, small uptrend, bad sell. And then today we have kind of a continuation. I got privy first time I had the channel about like that. I had at the end of this reversal bar and I pulled it out. My target was Wednesday's high, and I wanted to see how it would look if it was to continue within that channel. But I didn't have the channel up during this price action, even though it did pull back. So I put it up around this when this price action was happening. I was like, oh crap, let me see what's going on with the previous day. And so for the previous day, it looked like a bull run, a pullback, a bull run to the top of the channel, and a pullback in the opening. The opening was horrible. This is a really tight trading range. I hope you guys didn't get shredded. I was down about $40, and I was like, wow, I'm not even mad at that. There'd be days I'd almost blow out the account trying to maneuver this. So first bar of the day is a big bear bar. Something that really caught my attention was how the market didn't test yesterday's high. So we raced up and it stopped right about one tick under yesterday's high and raced down. I redrew this line a couple times to make sure I was legit on yesterday's high to the tick. So because I think that's really crucial. This is yesterday's high. I think that's really crucial that it didn't tag because I don't know. That just really stood out to me that it was one tick away. That made me think we're either gonna plunge lower, like just go boom and straight to this magnet or the EMA, or we're gonna come back on one of these bull legs and tag it. So that's kind of just, I don't know, that just really stood out to me. Anyways, first bar of the day, bear bar reversing from yesterday's low. They got 2 legs down here. This is an implied 2 legs. I'm trying to practice my counting, my leg counting, because it is important. Leg 1, leg 2. Look at that measured move. That's crazy how these things work. Oh my gosh. I pulled from the high. I'm just pulling out the draw line or something, whatever it's called. So I pulled from this high. And yeah, look, 1 to 1, or not 1 to 1. Leg 1 equals leg 2 in this situation. I guess you could say 1 to 1. Is it a 1 to 1 trade? It is. I mean, yeah, it works both ways. I guess however you look at it. It's you might get trapped though. I'm starting to get trapped in these situations, and it's weird because sometimes the dribble will go, and sometimes it's an actual trap. So I'm starting to learn there's no hard rules in trading. You just got to understand when to apply what. Did I delete yesterday's high? Where is it? There we go. So yeah. Leg 1, leg 2, off the first 3 bars of the day in a reversal. We have bullish pressure from yesterday. I'm going to delete the channel. We have bullish pressure from yesterday. Big good wick on bar 3, and we push up for 3 bars, and I think this is good enough for a second leg by the bulls. Bears get their leg down, so you can look at it as a leg 1, leg 2, leg 1, leg 2, leg 3 fails. However this is looked at, I think the main thing is to not trade it, because this is a limit order market, and if you're just starting out, it'd be better to just sit this out, honestly. Like, I could say, through experience, if you're just learning how to trade and you can't trade with limit orders, just watch this. If you can avoid this, if you're just learning how to trade, if you can just learn to avoid this price action, you will save yourself a huge headache. Please, if there's one thing you guys take away, is don't buy this high and don't short this low. You could make money on this low. I went short here and I still wasn't fast enough to get out on the reversal. So if you got quick hands, 80% of breakouts fail. I don't think that's a good trade, but every trade is a good trade if you manage it right. So anyways, leg 1, leg 2, leg 1, leg 2, leg 1, leg 2. So many wicks selling. This is testing the yesterday's close right here. I'm trying to focus on what bars are testing. Like, when the bars are moving, they're always moving to a support or resistance for a test, whether that be the bottom of a breakout, top of a support, or bottom of a resistance, top of a support. The market's always moving for magnets. So this looks like a test of yesterday's close, and there's more sellers, and they sell off for leg 1, leg 2. Excuse me. Leg 1. So yeah, leg 1, leg 2, you get filled, and there's some trickle down. So you could have a runner and get out here. 80% of breakouts fail. Good reversal bar. I bought this bar and I got out here because I was like, I don't know what's going on. I'm just gonna wait. But yeah, I think this is a really nice reversal bar, and there is good context if you're willing to hold. This is kind of like front running a breakout, or you're scalping, or you have a limit order set at these wicks, and then you get filled on the way down and you scalp out. That's a good trade. And yeah, the price is starting to coil. We have 3 pushes up. Okay, so it's a new low. So this is the low. So 1, 2, 3. This is a hard read. 1, 2, 3, 4. Failed breakout. 5, and then a break. We go test. This is a breakout. It was successful, and it had a really deep pullback because maybe you guys say like the trend is a failed. This is a failed breakout. The bars start big and could gradually get smaller and get more wicks, and I think it's fair to get out below this bar. However, even this is price action, and there's a bull gap, so you got to get out if you start to see the bulls start to accumulate more bull bars, because look, the last close was here and it got no continuation. It actually gets filled. All the bear gaps have now been filled. So at this point, if you're short, it'd be good to think like there's no more bear gaps. Is this going to be the first bear gap into a huge spill, or is this going to be a small bull gap into a small pullback bull trend? So yeah, spike and channel, deep pullback, and it goes. We can see some legs here. When we see wicks, it's an implied leg. So boom, boom. Where's the wrong one again? Okay, top of the wick, bottom, and there you get your 1-to-1, and then you get some here. So yeah, the leg counting is tough in my opinion, because that's leg counting. I would not catch that on the fly. However, I did catch this. Leg 1, pullback, leg 2, pullback. This is, I kind of this like as the final flag, leg 3 you could say, and the final flag failed. Leg 1, because the bears made money here, so to me the count is resetting. Leg 1, leg 2. Bears don't even make money here. They don't make money here, and then this is climactic. These are the best looking bars late in the bull trend after all this price action. After bar 1, these bear bars, these are reasonable shorts to take. So you could assume the market is going to want to come back to the balance zone here. Maybe test the opening price, or if this was the opening price. So yeah, the market is definitely range bound. Bulls and bears have been making money. However, I would not short here because this is a breakout. Look, bears are getting trapped. They're not making money. So spiking channel, pullback, leg 1, leg 2. This is a complex. Leg 3, leg 4 fails, or you can say leg 1, leg 1, pullback, leg 2, pullback. Like this is a hard day to count. There's lots of ways to count this, and then they reject right under yesterday's high. This was excuse me. The blue line is yesterday's high. That was my target, but I got out under this bar. I got out around this bar and got short on this bar for a scalp back to the EMA. With this much selling prior, I was pretty confident that we would at least test the EMA soon, even if that means make a double bottom and go. I was ready to just scalp out. So I think this was a good trade from an exhaustion perspective. First pullback, and this isn't a strong trend, but it is a first pullback in a trend. So we can see maybe a test of the recent highs after a tight bull channel in the first break. It's natural to test the highs before looking for a swing short. 3 legs down. 1, 2, 3. Wedge bottom bull flag. Higher lows are getting put in under the EMA. Small gap. Good long here. It retests, makes a double bottom, and we raced. This was a huge exhaustion candle. We raced to a high. Bulls can't close the new high, and the market sells. I think this is a sell vacuum to test the opening range around this balance zone. I think this was a sell vacuum. Once this leg got put in, bears are officially making money again. Last leg in a trend is the first leg in a range. They made about 7 points, and then they're going to start lacing limit orders everywhere. That's what they did. So the market sold, and then they got short here. And huge bar. This is 1 5-minute sell vacuum bar. That was a gift. It's natural to take profits. Or I got short here, scalped out, got short again, scalped out, and I was like, I'm done for the day. It was a tough day, but I walked away green. Definitely am not. This was just nonsense, man. I hope you guys did not get shredded there. Just gonna update the chart with you guys, and then update the weekly charts. I'm having some Thanksgiving wine Saturday while I make this video. Put the tree up tomorrow. It's a little early. It's not that early. It's about to be Thanksgiving. It's good enough for the tree. Just cheers. Yeah, so this is how I'll be looking at my chart on Monday. The markets are closed on Thanksgiving, and it's a half day on Friday. So this week was pretty boring. We had the huge CPI day, and then nothing. It was just this sucked to trade. However, this is really bad follow through after a high one. We can expect sellers. Remember, after a good high one, there's usually sellers sitting above it, and that's why we wait for the high two. And this is starting to prove that there are sellers sitting above the high one here. So maybe we start to pull back now, because this high one is not getting follow through. This is actually the minimum the bulls need is not a bear body, but it's also the minimum the bears need is not a bull body. So it's a 50-50 market. Range, double bottom, double top. Wait for follow through. That's the rules on the 5 minute, so it wouldn't be different on the bigger time frames. Just updating the weekly. Oh, this is the weekly low actually. Alright, that's Monday. Yeah. And let me just 50% this. So these are the levels I'll be looking at going into the week. Very simple, you know. I'm trying to keep it simple and consistent. Last week's high, 50%. Last week's low. Eventually, I'm going to start adding monthly levels. I'm looking at them. The way I do it is like, I start to think about it before I add it, because once I start adding lines, I just get so confused. I'm like, is this a breakout? Is this a rejection? I think this is like just enough context for me to understand where the markets are at in terms of like a daily chart. And then, this is, I think, really good for everyone to have because everyone knows what the high and low close was of the previous day. At any time frame, any person can just say that is an absolute number. Maybe it varies a couple points, but that's an absolute number. Whereas like, oh yeah, breakout at 4.526. Yeah, that's a breakout, but maybe other people don't see that, and you can't really argue with them because it did eventually return back to its price. So was it a successful breakout, or is this just some random number? Intraday it matters, but after that I think it's like the yesterday's high and yesterday's close is important. As long as last week's high, last month's high, the 50% levels. So yeah, double top, double bottom at the top of a range. So this is, since we are in a range bound environment actually, well, we might not be, we won't know until the breakout, but let's say we are in a range bound environment. Here's the fibs for the breakouts. However, change it range bound. I'm gonna delete this for 2 seconds. Then this end, so it would be sell high, do nothing, take profits, buy low. This is interesting. I kind of want to keep this up here. I'm gonna just keep the 50% level. How do I get it back? Yeah, I'm just gonna keep these fibs up here for the moment and just see how they respect. There's nothing wrong with that. I think that would be interesting because we can. This 50% level is still the 50% level with or without the fibs, so it doesn't really matter adding that. This is cool, actually, on the hourly chart. This is cool. So yeah, hourly chart, we are stalling around the high of last week's range and the upper third of the range. Doesn't mean we're gonna sell just because the lines are there. We have to wait for actual bear bars because we could break out, and then if we broke out, I would switch it back to the 200% fibs, and that would be the way I play it. And that's what I've been kind of doing intraday, just to have some consistency, is wait for the range. I put these three up, and then I wait for the breakout, and then I flip it to the 200%. So oh, SPY's breaking out to the upside. Then I just go like this. And now I'm playing the same game, just... It doesn't work all the time, but it just helps kind of keep me from doing silly things. Like shorting fresh breakouts really is the biggest thing. So yeah, it's pretty easy. That's not pretty easy, but you know what I mean. Pretty easy to talk about because we're doing this every day now. Sell, buyers, we're consolidating, really bad price action. I think Monday, Tuesday, Wednesday is going to be slow as well, as long as Friday, and then hopefully we get some movement at the end of the month. I'm really playing it slow with this payout. The account's almost back to green. Ooh, I took a nasty hit the other day. So yeah, again, if I drop these videos every day at 3 p.m. Monday through Friday, I'm gonna start trying to upload some weekly content. Hit the follow button if you guys are learning. Keep dropping comments and telling me what you guys want to see. Trader trick, I'm gonna try and do more leg counting because yeah, it's good that we just learned how to leg count. I didn't catch this in the flesh, so that's a leg 1, leg 2 on a smaller time frame. So yeah, you guys have a good one. Have a good night. Drink some wine. Use your stop loss. Bye. And if you're a kid, don't drink alcohol.